Hey guys, it's Elite Equity here, and today we're going to talk about Robinhood. So Robinhood, as you guys can see from CNBC, Robinhood jumps after report that SEC will not ban payment for order flow. So what exactly is payment for order flow? Basically, let's take a look here. So I believe so payment for order flow is basically like let's say you're an investor, you want to buy a stock. Robinhood is like the middleman, and then there's like the actual brokerage that the wholesaler that actually places your order. So you would go through Robinhood, you would buy your stock. Robinhood would try to now outsource it to a real wholesaler that actually buys the stock for the cheapest price possible, and Robinhood makes money through a fee. They're like the middleman. They're like an agent basically. So we can take a look here what it exactly is. Number one, exactly how I kind of mentioned it. A customer instructs a broker to execute a stock trade, and then the broker sends the trade to a wholesaler and collects the fee. The wholesaler is required to find the best execution, which could mean the lowest price, the speediest trade, or the one most likely to be completed. The wholesaler returns the proceeds to the broker, who credits it to the customer. So as you guys can tell, Robinhood is the middleman, and the wholesaler gives a small fee. That's how Robinhood makes their money. And today we found out that Robinhood, it jumped. Let's see what's that. It jumped. Wow, in the morning pre-market it was up 10%, but now it's only up 2.72% for the day. But Robinhood jumps after a report that SEC will not ban payment for order flow. And if we take a look, the SEC, the Bloomberg News reported that the SEC, Securities and Exchange Commission, will stop short of banning payment for order flow, through the regulatory agency may still make rule changes that could lower the profitability of the practice. But as we can see, it was a controversial practice, but now that payment for order flow is not banned, this is really bullish for Robinhood stock. This may change the landscape of brokerages and Robinhood, Webull, all these brokerages that may now use this type of strategy to make their money, make a fee off the wholesaler. So, as we can tell, it was a lot of scrutiny they were getting, Robinhood, but now they're actually paying for order flow is banned, so that's a really bullish sign for them. But I want to kind of take a look at other articles, referring this. Why Robinhood stock is surging today. Shares are higher. SEC, we talked about that. Proposed new rules for American equities markets being viewed as positive for brokers that get paid for processing rates. However, the report says that the SEC may still make other changes that impact the profitability of payment for order flow deals. So basically, this may, like it says here, this may impact the profitability, because the SEC might make it where basically Robinhood, the middleman, doesn't make as much money from the fee, so they might lower the fee where they don't make as much money. But this, overall, this was a scrutiny they were facing. They finally got rid of it. SEC got rid of it, so this will help build a bullish case for Robinhood. Same thing here, talks about the same thing. Paying for order flow provides an important revenue stream for Robinhood and Charles Schwab. It allows brokers to offer commission-free trading for retail traders. The practice come to the fore during the meme stock craze in early 2021. Wow, this is insane. But I want to talk about Robinhood stock. Should you invest in it? Is it a good strategy to invest in it for the long term? Should you park some cash there? As we can see here, if we zoom out for the year, let's say, it's down 75% past year. For the 5 years, it's down 73%. So it listed in the NASDAQ July 29, 2021. It's down, a lot. So I mean, you're getting at a really good deal. You're getting it below IPO price. So you're getting at a really good deal. And if we can take a look really into Google Finance, I pulled it up already. Their market cap is around 9.34 billion. One thing a metric I love to look at is price to sales ratio. So that's basically taking the market cap, dividing it by their yearly revenue. So let's go to annual, and 2021 they made 1.82 billion. So that's insane. That's actually really good. Their price to sales ratio is really good. I already put it here. It's calculated by taking a company's market capitalization and dividing by the company's total revenue over the past 12 months. The lower the price to sales ratio, the more attractive the investment. So their price to sales ratio is really good. Another thing I love to look at is I pulled up the 10Q here for as of June 30, 2022. You know, do they have enough cash on hand to survive a recession or survive, you know, a high interest rate environment? You know, as you guys can see what the Fed did and what's going on right now, it's like, it feels like recessionary times, really. You know, the public equity market took a hit. Will they be able to survive? And they have around around $6 billion in cash. And their market cap, I believe, what was it? 9.34 billion. So, wow, they're trading below their market cap. Like, their market cap, they have $6 billion in cash. So they have so much cash on hand. That's just insane to me that they're trading this low. And I only think they're gonna do better. They're trading almost at cash value, their stock, or they were before when it was like, you know, at $7. But yeah, the stock price is really low. And as we can tell here, like, I like to look at Kathy's ARK investments. They're her top, you know, ARK ETF holdings, and I was looking through it and I was like, whoa, her 18th position is Robinhood. That's the most, you know, one of her biggest positions, you know, in her top 20 positions, and she has like a $204 million investment in it. So, you know, a lot of people obviously hate on Kathy, considering she's down like about, what is it, for 5 years she's only up 15%, for the year she's down 66%. But you know, I still believe in her long-term. Tech is the future. Tesla, obviously, is probably why she's really up. But, you know, Robinhood, I still think it's a good stock. You know, should you invest in it? I think you're getting in a really good discount, a lot of cash on hand. You're getting it while, like, markets, public equities, housing, everything, like, really the market in general is just at, like, a bottom almost. You know, maybe we could go lower, but it's like, you can't really, like, you never know how low could it go. It's already down 75%, you know, Robinhood stock. So I would buy now. You know, it's a really good price. If you get below 10, like, it's a really good price. So much cash on hand. They're not big. They have free cash flow for about 3 years. They'll do really well to get out the recession. Robinhood is probably, in my opinion, I use it personally as well. I use a variety of different brokerages like Thinkorswim and whatnot, Webull, whatever. But Robinhood is the most easiest to use. Their user interface is like amazing. Like, literally, like, anyone that's new, they're gonna love Robinhood first. The only reason it received a lot of scrutiny was because of the SEC banning payment for order flow, which was a significant amount of their revenue. And two, it just because after the meme stock craze, when Robinhood banned all the trades and stopped the trading, halted it for Robinhood users to buy and sell it, that's when a lot of retail investors just hated on Robinhood and stuck to that, and they actually moved brokerages. So that really hurt their business. So as we can see, they have a lot of cash on hand. ARK's, you know, position in their ETF is 18th. They're the 18th biggest position. Payment for order flow is now officially banned. I mean, they uplifted it, so, you know, they pay for order flow is good now, so they can make a significant amount of revenue from that. Another thing I love to look at is their recent insider transactions. So in the last 3 months, well, you can see in August 4th of 2022, a 400K sell. That's not much, not anything significant. By Index Ventures, August 3rd, $1.1 million sell by an individual named Daniel Gallagher. Not sure who that is. $73,000, so no point of even discussing it. But in May 10, 2022, what was the price of Robinhood actually? Let's check. May 10, 2022. Wow. Around $9.20. Wow, below $10. How did I know? You gotta buy it below 10. If you get it below 10, you're getting an all-time, like almost all-time lows, and you'll be fine for the long run. But yeah, so they put $404 million into Robinhood, Emergent Fidelity Technologies, and this is a company, obviously. And let's look into it. I mean, that shows something. Like, that shows high conviction in Robinhood stock. So Emergent Fidelity Technology and CEO FTX, you guys know it's another trading brokerage. CEO Samuel Benjamin Bankman-Fried filed a 13D, especially showing your stakes and like how much you have in Robinhood, how much you're investing on Robinhood. Nasdaq Hood showing 7.6% stake in the brokerage. Wow, so that's really high conviction into Robinhood. Of right below 10, they probably got it. Yeah, that's $404 million. It's just all these sells doesn't even matter at that point. I love to look at the ownership breakdown. You know, I like a stock that has mostly institutions buying it. That shows really good promise for the long run. I don't want just like general public or the retail buying in. So a lot of institutions, wow, 286 million, 32.5% institutions already bought in. As we can see, you'll see here the ownership breakdown. There's an individual named Baju Pot. I guess he's a co-founder and member of board of directors. Has around 77 million shares, 8.83% ownership of the company. Then Index Ventures, wow, weren't they the ones that sold? Oh, they sold only for 100K, so they probably just reallocated the portfolio considering the current state of the markets. DST Global, then Emergent, Fidelity, wow, that they probably got a big shade. They're at 558 million. They literally bought 404 million, so they're doing really well. Obviously the CEO, Vanguard. I love Vanguard, one of the biggest institutions for like 401k, retirement accounts. So if they're investing, that's a good sign. And ARK, obviously Kathy, which we mentioned, that's the 18th biggest position in our portfolio. Another interesting fact I love to look at is actually the number of employees. I don't know if many people look at it. I don't think anyone mentions that. I love to see like a growing number, right? Like I believe if you're a growing business, you're gonna obviously hire more people as well. And your number of employees is gonna increase. And as we can see from December 2020, from 2.1K employees and currently sitting at 3.4 thousand employees, that it's been growing. It's been growing in like a more linear fashion. Even here was like an exponential fashion, but and that's really good. That's really good for the company. Shows it's growing. Revenues are growing quarter over quarter. They're sustaining their business and things of that nature. But one thing we can see here in the last tail of this graph is they went down. And that's due to the fact because of the high interest rate environment. A lot of people didn't expect the Fed to be so hawkish and aggressive with their rate hikes, so they didn't do really. They laid off people. I remember they were laying off people, and a lot of tech companies were doing that. Meta included. Google stopped hiring. Amazon. A lot of tech companies stopped hiring and actually laid off a lot of people. They were hiring way too fast during this period and didn't realize it was hurting their profits. And obviously the famous case of Better really laid off a lot of people through Zoom call, which was just pathetic. It's the fear and greed index is around 30, so a lot of people are fearful. Extreme fear in the market momentum in the S&P 500, and it's 125 day moving average. What else do we have to talk about? A little background on myself. I talked a lot about, real quick, we can say Hood has more cash than its total debt. Yes, 3 years based on his sufficient cash runway for 3 years based on his current free cash flow. Their short-term assets is more than their short-term liabilities, and same thing for long-term assets and liabilities. One thing I want to say is just subscribe to the Elite Equity channel. We were at 22 subscribers yesterday, and today we're at 24, so 2 new subscribers. Thank you for that. I'm gonna post content every single day. I'm really gonna go hard on it. Like I love doing this stuff. Like I naturally have like an inclination for it, and I love it. And to give you guys a little bit more background on me and who I am is my name is Mukeet Tasvik. I work at Bank of America as an assistant vice president, doing capital management, and that's basically like working with the Federal Reserve, where we do stress capital buffers and the stress test. Like the stress test is what I personally work on, and see risk-weighted assets and making sure we have enough cash on hand to survive recessionary times and things of that nature. And I was like, hey, like why not give my take on the markets and what's going on and what's gonna happen and things of that nature. So I genuinely love it, and I'm currently studying for the real estate license, so which I should get that soon. And you guys will see me buy and sell homes for people, and also buy my first investment property and things of that nature. So that's all I really want to talk about. Please subscribe, check out our TikTok, Elite Equity, all social medias, and thank you very much, and we'll see where this journey takes us. And wait, before I end the clip, give you my general consensus on Robinhood stock is should you buy, should you sell? I'm personally bullish on Robinhood. One quick fact, actually, before I let you guys go, one quick fact that I do want to look at is I like to look in the Q&A of earnings, and this was really interesting to me. Jessica asked, is Robinhood looking to expand into retirement accounts, 401k, IRA? If so, when? With retirement accounts, I can't tell you how excited we are about this product. When I heard about that, when the CEO literally says that, they're gonna have retirement accounts, 401k. They're you know, with the cash on hand, they're looking to, you know, fund the business, and, you know, build a business really. They're gonna do more technical charting, which is really good. So they're just doing really well. Like, you know, they're gonna add more, like, you know, 5 years. They only have up to 5 years. They're gonna max it out to 10 years if the stock is available for 10-year charts. They're doing so much more. They're just basically increasing their services, which shows a growing business. They're smart. The CEO's taking its time, not just rushing into it, doing retirement accounts and doing so many things, technical charts and stuff like that. So I think Robinhood will be a leader. I'm bullish at these prices at 10. If you could get it below 10, I think you're getting a really good price. It's already down 75% to year to date, and you're getting it below IPO price. They have so much cash in hand. I'm really bullish below 10. I would start a small position. This is not financial advice, but, you know, it's all up to you. Thank you very much. That was my bullish thesis on Robinhood, and Ali Equity out.